And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live from Channels HQ. I'm Ladi Williams. It's great to have you join us. Let's kick off your morning now with the market. See, oil prices rose for a second day today as Brent futures rose by 64 cents to $78.63 per barrel in early trade, while U.S. West Texas Intermediate crude, that also gained about 64 cents to $73.81 per barrel. We'll drill down on the drivers later on in the show on the commodities market update. And moving on to the grain market now, we see Chicago soybean futures lost more ground, weighed down by a U.S. forecast of higher global inventories, though robust export demand and concerns over the weather in South America lent some support to the grain market. The most active soybean contract on the Chicago Board of Trade, SV1, slid about 0.9% to $14.69 for a quarter of a bushel after edging lower on Friday. The U.S. Department of Agriculture last week increased its estimate of global soybean ending stocks, while Argentina's estimated area for 2022-2023 soybeans could be cut due to prolonged drought. And the Africa Development Bank, AFDB, and the World Bank are set to reform the global electricity sector with their Global Electricity Regulatory Index report. The report, which is sponsored by the World Bank's Energy Sector Management Assistance Program and undertaken in partnership with the AFDB, is targeted at capturing the state of power sector regulation in Africa and across the developing world. The GERI, which surveyed 82 countries across sub-Saharan Africa, Asia, Europe, and Middle East, and Latin America, would help World Bank's global effort to promote robust electricity sector regulatory environment. And interventions by the Central Bank of Nigeria is yielding positive results as business activities rebound following the effect of COVID-19 on the economy 2 years ago. The Deputy Governor in charge of financial systems stability at the Apex Bank, Aisha Ahmad, explains that the cumulative total disbursement to the critical sectors of the economy stand at 9.7 trillion naira. The interventions, according to the central bank, are assisting in boosting the nation's foreign exchange, ensuring food security and job creation. Take a listen.
It's time to take stock for members of the Development Finance Department of the Central Bank. The meeting is coming 2 years after the COVID-19 pandemic took a negative turn on businesses, agriculture, infrastructure, and the energy sectors. And for officials of the bank, it's time to take stock and then prepare for the days ahead.
The task of enabling food security, stimulating finance to the real sector, and catalyzing action towards inclusive economic growth in the country is hardly a walk in the park. The Central Bank of Nigeria has been at the forefront of ensuring that we achieve the food security efforts in collaboration with other fiscal authorities, also stimulating growth in collaboration with the Ministry of Industry, also doing something in the health post-COVID in collaboration with other stakeholders in the industry.
Figures released by the Apex Bank shows that funding by the bank to jumpstart businesses in critical sector amounts to 9.7 trillion naira. The manufacturing sector got a total of 32% of the amount, while sectors such as energy, infrastructure, export, MSME, and services also benefited from the institutions. While the interventions come in handy for the beneficiaries, the CBN is asking them to pay to allow for more disbursement of the credit facilities.
In recent years, the efforts of the interventions of the CBN has ushered in a lot of growth and I think a lot of impact, as we just heard from the real people in Nigeria. We always try to emphasize to all stakeholders that, all of these are loans, they're not grants. It's important that you pay back so that others can also get the same opportunity.
And then comes testimonials from states that have benefited from the intervention.
How do we move our production from 92,500 tons per annum to 1,050,000? Simple. Financing from CBN, and together we work on rice varieties that gives about 5 tons per annum, per hectare, as against 1.1 tons we were getting, 1.5 tons we were getting before.
The central bank is promising more interventions in the coming days. This is expected to boost food production during the dry season to cushion the effect of food insecurity necessitated by flooding in some states.
And now to our first conversation. The National Pension Commission has released a list of 34 primary mortgage banks through which retirement savings account holders can access a residential mortgage. Out of the 34 mortgage banks, 19 are in Lagos, 7 are in Abuja, while 2 are in Akwa Ibom, and the rest are in other parts of the country. Let's talk to Vida Echetabuna, Consultant General, 4th Avenue Limited, join us right here in the studio. Great to have you. Good morning.
Good morning, laddie. You look mighty dapper today.
And you look great yourself.
Thank you. Thank you.
So it's finally here. You know, everyone's been waiting on this list.
Yes.
It's here now.
Yes.
How's the industry receiving this?
Let's just say that the list, I believe, came out on Friday, and the mortgage houses would be putting things in order, though we expect they would have been doing that prior to now. But it's welcome news, so at least it's a way forward, you know, beyond the guidelines coming out. People now know who to go and engage, you know. So it's welcome news. Contributors are excited, and I'm sure that most people that are doing their 2023 planning have that on their bucket list for Q1 next year.
Yeah, because we've been getting a lot of inquiries from contributors saying, oh, when is this going to happen? What can we expect? So
Yes.
it's here now, but 34,
Yes.
what do you think of this number?
I think that it's a decent number to start with. There are a number of old hands there, you know. The list is quite robust and spread across the nation. So for CBN and Pencom to have come out with that, then it means that those organizations are pretty rock solid, decent enough to be able to cope with, you know, the outcome of that guideline.
And decent enough, but what should contributors look out for, you know, in choosing your mortgage lender?
Okay, definitely they need to look out for more than a beautiful name, I would say. I would, as a contributor, one thing I would be looking out personally for would be speed of service, track record if possible, find out from other people who have used this mortgage lenders prior to this particular, you know, guideline. Accessibility too, because I mean, you may have a preferred one, but what if for some reason they're not in your location? You know, so I know that a lot of things are, you know, remote, virtual and all that, but you also want to make sure that you're working with a partner that is able to meet you at any point in time that you need that engagement. So those are critical things for me to look at. Beyond a transaction, we're looking at after-sales service, you know, relationship management. If there are hiccups, how do they deal with such things? Is it purely black and white, or are they able to bring the human, solution-oriented, you know, angle to the conversation? So those are critical things that I would expect contributors to look out for, because a lot of people will be marketing, you know, the mortgage lenders, but go beyond what appears juicy to find out, you know, it's in the little things.
You should also read the fine print.
Oh, absolutely. Absolutely. So, you know, and there's some rates that are, well, clearly going to be too good to be true. If you have a too good to be true situation, then perhaps you should look at it properly and make sure it is really good to be true or
Right.
too good to be true. One of the two, you know. Of course, rates. Because everybody is price sensitive now. Everybody is feeling the pinch, but don't dive so much that you now find yourself in a bigger issue. So do some homework. Even if you have a preferred one in mind, sample 2 or 3 other, you know, service providers in that territory and do a proper check. That would help as well.
All right, so the talk about the 25% there, what if that's not enough, you know, to get that dream property of yours? What happens next?
Okay, so let's even back up a little. For majority of holders, and you know Nigerians, we have very, very exotic tastes. So if we go by the exotic tastes that we have, and we go by the balances in RSAs, they're divergent. But that being said, if you do not have enough, if your 25% equity from your RSA is insufficient, then you would need to make up the difference. It's part of what was stated in the guidelines, that where you find a house of your choice, but your 25% equity is insufficient, then you make up the difference to the mortgage lender of your choice and then can proceed. But then again, it goes beyond, a one-off payment. Whoever is doing that must also take into consideration the monthly payments and make sure that they're able to stay afloat while they're doing that. So it's a real balancing act.
And talking about the balancing act here, some already have existing, mortgages, and some might just say, you know what, why don't I, access this loan to, finish up this?
I know, right? That would be possible, I imagine, in the future. I believe strongly that what the regulators are trying to do right about now would be to reduce the gap between the haves and the have-nots. Now, so this particular access at this point in time is to give everybody who has not had the opportunity of accessing a mortgage at all, much less owning their own homes, the opportunity to take advantage of it. Now, I believe that providing an opportunity for refinancing is actually just going to benefit people who are already in clearly an advantageous position. So having that restriction at this point where it can't be used for refinancing, I believe would play a role in reducing the gap, economic disparities between different cadres of people and career and all that. So for now, it can't be used for refinancing. I believe it would be a consideration maybe in the medium to long term, but let's see how many people we can actually put in a home ownership position. That's the way I would, perceive it.
And do you believe that, every contributor would have, access, to this equity?
Short answer, yes. Long answer would be everybody will have their time. And by that, I mean that the people who are just starting career or have worked for just 5 years and below, their 25% balances will not make any real impact in home ownership. It would be too small. So there is a process of time where people need to invest more, in their savings, in their future, by actually participating and having a retirement savings account, and possibly also doing a voluntary contribution, because when you do a voluntary contribution, it somewhat fast tracks what the balance you would have would be. So everybody wants to own a house, everybody wants to buy a car, but just like every other asset, some people would be able to buy it faster than others. You will pay the price, it's part of life. You will grow into certain shoes. So everybody will have access to it, but financial planning is the name.
Is key. And obviously we know there, we know the immediate limitations to this, but are there others that we don't know about?
Right now, beyond the reasonability of accessing your 25% for obvious reasons being that your balance is too small to do anything meaningful, there really is not any. Maybe the other thing which could be a wild card would be employers who do not remit their pensions after deducting from employee salaries. Because again, part of the guideline is that you should have contributions for a cumulative period of 60 months or 5 years, as the case may be. So people who are intending to use that need to also hold their employers accountable. I also know that Pencom has recovery agents, that they send to employers who default, So there are sort of machineries involved, but like we say, lead me not into temptation comes before deliver me from evil. Right. So if people can actually pay attention and make sure pension remittances are made as due and when due, then, it reduces the issues surrounding accessing that.
Right. All right. We know this is obviously an inflationary period, globally, central bankers trying to rein in inflation at this time, even down here too. We've seen the Central Bank of Nigeria raise rates about 500 basis points. And, going into next year, who knows? We might see, more hikes because inflation is still here with us. So what are the other risks to this whole, arrangement?
Well, I'm going to answer that question in a not so straightforward manner. Inflation challenges, economic challenges, yes, some of it is within our countries, localized, but part of it is also macro, is globalized. The central bank, the CBN governor, Ministry of Finance, and every regulator, and I hats off to Pencom because, they have guidelines that try as much as possible to shield the funds from, the impact of extreme volatilities. But if we're being frank here, across the world, the challenges are there, so everybody's taking a hit one way or the other. Best way I can say it is, it's going to be a continuously evolving strategy, to find a way to manage this situation. The other way I look at it would be that perhaps within Nigeria, we would have a more established regulator for the real estate industry, not because there aren't, bodies, so to speak, but maybe authorities that would be as present and impactful as CBN clearly, as Pencom clearly, as SEC, not just because of real estate, but to be able to monitor pricing of houses, because right now, best I know, anybody can build and call it their price. Whoever can afford it can buy. But like we see in Western society, there's a way of benchmarking properties in this area, fall within this range and all that. So those are things that I would foresee in the future, in the near, medium range future, to see that there'll be a bit more structure in the real estate industry because there are many more people who are coming in there, and it really cannot be with every sense of respect, a free for all to just peg costs of properties arbitrarily, with their own.
Because looking at the industry, we're seeing, rising prices of properties too.
Yes.
Prices you could afford, before have more than doubled.
Or prices we thought we could afford.
We thought we could afford.
I know, right?
Yeah, so they're more than doubled at this time. And also, with the rate hikes, globally and back here, there's also that fear, of a recession, come 2023. So.
Yes, that's a reality. It's a reality. Before, when we used to shout aggressively about how tough things were here in Nigeria, we relied a lot on our relatives, friends, and family, abroad to help us out. But they are even screaming louder than we are right now. And here we can afford to say there's no light, so we had a hot night. Over there, they have cold, which is the opposite. It's very unlikely they can afford to have a cold night and make it into the morning. So the moving dynamics for everybody is a bit more stringent now. Everybody is a bit more touchy. I give an instance. I walked into a shop yesterday, and a pack of biscuits that I used to buy 800, 900, let's say 1,000, and they told me it was 3,000 naira. I lost appetite immediately. I didn't touch it. I walked away from it in a hurry.
Even I would lose appetite too. But going forward now, what do you think people should look out for next? As it pertains to this conversation about pension for mortgage.
Yeah. Okay. So what I would first of all like to tell people, would be that breathe. It's here to stay. Just like the entire Pension Reform Act, the contributory pension scheme, has come, is staying, it's working, we're all seeing it. Everybody may want to be in a hurry to quickly access this money, access it and quickly, but it's not a race against anybody. Everybody should just, take their time, access it when they are ready. Again, that's the onus on we contributors. It's not a race. It's not a, I want to quickly take it before they shut the window. There's no shutting of the window, best we know. The other thing, again, would tie to what I had said previously. I strongly perceive, and this is my sitting down to just project, that no longer can real estate transactions just be like that, so to speak. There really would need to be a more standardized, monitoring body, make sure that these houses are where they say they are, who is selling, why is your own two-bedroom property 2 million naira more expensive than the average one.
And the issue of title, too.
Exactly, so there would be a lot more, I imagine, attention being paid. It may not be boom at once, but it would evolve just as we have gotten here with the general, scheme. So
definitely a ripple effect,
absolutely.
Expected.
Yes.
Thank you so much, Vida Chetabu, Consultant General, 4th Avenue Limited. It was great having your perspective.
Thank you. Thanks so much.
All right, so we've been talking pension for mortgage there. Next, we'll be heading on to other markets, and we'll also be looking at what's happening in the commodities market. Do stay with us. This is Business Morning. All right, now for commodities market update, we have Dr. Adesola Sumoni, Financial Derivatives Company there, joining us to bring us up to speed on what's happening there. Great to have you. Good morning.
Good morning, Ladi. Thank you for having me on the show.
Great to have you. So again, the oil market still as volatile as ever, but we're seeing the prices are up this morning. But, looking at this market, it looks like the prices just want to head downwards, regardless of, some bullish news we've gotten in a couple of months.
Thank you for that question, Ladi. At the moment, I think there are a host of factors driving oil prices at the moment. And like you mentioned, the oil market is currently volatile and is likely to be volatile in the near term. So on the demand side, we are seeing loosening of the COVID-19 restrictions in China. And I think this is positive. It's also kind of renewing hopes about a rebound in oil demand growth. So that is positive, because China is the largest buyer is the largest importer of oil globally. But on the supply side, we're also seeing some factors. For instance, we heard about the Keystone export terminal, which supplies, I think, around 620,000 barrels of oil per day from Canada to United States. Apparently, last week, they discovered a spill or a leak in that oil pipeline. And by the time they discovered it, I think around 14,000 barrels of oil has already leaked, has been spilled. And this, is the kind of the largest oil spill that has happened in the United States in decades. So it's unknown how long it's going to take to clean up the leak and as well as repair the pipeline. So that's 620,000 barrels of oil is offline. In addition to that, we know that the EU is trying to place a price cap on Russia's oil, and Russia has come to say that anybody that tries to place a cap on their oil is not going to they're not going to sell to any country that tries to price their oil at the price cap. So we are seeing those potential disruptions coming from Russia, and going forward, I think, like you mentioned, Ladi, the oil market is going to be quite volatile. Trading is going to be quite volatile, driven by how the China's COVID-19 policy, how it evolves, how it unfolds. We've seen some people really fighting against the policy, even in China. Two would be the reaction to Russia to this price cap on Russia's oil exports, and three would be the pace of monetary policy. The pace of hikes in monetary policy are coming out of the United States and Europe over the near to medium term.
And obviously, 2022, the earlier part of 2022 was great, for oil prices. But going into 2023, do you think it's still okay to take positions, at this time, hoping for more gains in 2023?
Ladi, it's a gamble, right? It's very, very, very risky. We don't know what's going to happen coming out of I mean, up until last week or 2 weeks ago, China was saying, you know what, we have this zero COVID policies. Now, once there's at least one case of COVID-19, they're going to shut down everything. But now we are seeing even Chinese people really fighting against it. We've seen a lot of protests even within China against this policy. So I think the government is beginning to shift position. We did not see that coming, for instance. Also, looking at this price cap, Russia has literally threatened that anybody who tries to price our oil at this EU price cap is not going to get any oil from us. And you know, Russia, I don't think Russia is bluffing at this time, because Russia is such a big player in the global oil market. So if Russia reduces their export, the prices of oil is going to spike significantly.
All right. Well, what's happening with wheat and cocoa prices?
So for wheat, thank you for that question, lad. So for wheat, we are seeing the price of wheat also trend upwards. I think also this is coming from concerns of supply disruption out of the Black Sea. For those who don't know, the Black Sea is kind of an export region that borders Ukraine, Russia, and Turkey. So there was this agreement that, you know, despite the fact that we are at war, Russia is going to allow Ukraine to export grain out of that port. I think it's a port in Odessa. But I think over the weekend there was some attacks, military attacks near the export terminal, and that has kind of like shut down operations in the terminal. And that is why we are seeing wheat prices trend upwards, because Ukraine is one of the largest exporters of wheat globally. But as at the end of yesterday, I think as operations exports have resumed, so I expect that the price of wheat would moderate in the coming days. In terms of cocoa, we know Nigeria, Ivory Coast, Ghana, they are the biggest exporters of cocoa. And now the Harmattan season has started. And usually the Harmattan season kind of dries out the cocoa pods, and it affects the harvest. But what we are seeing is the prices are going down, which suggests that, you know, at the start of this Harmattan season, it's not really cold. So the Harmattan is mild at the moment. So the soil is still moist enough, and the main crop harvest is still going on as planned. So we're expecting big harvest coming out of Ivory Coast. However, at least from now up until mid-January. However, by mid-January, we think that, you know, Harmattan will have kicked off in full swing, and that may now affect the cocoa mid crop harvest going from April up until September. But for now, I think we're good.
Okay, well, we're good. I'll take that. But we got that data that Nigeria's trade balance plunged by 86% in the third quarter. What do you think drove this?
I think let me just give you a quick summary of what's going on, really. So we have trade surplus, which is good, around 269 billion naira in trade surplus. This simply means that we exported more than we imported, which is good. But then when we look at, and on a quarter-on-quarter basis, Nigeria's total trade was down 9.66%, but on a year-on-year basis, it was up, because compared to last year, where, you know, COVID-19 was still in full sway, we also had all of these supply disruptions, you know, so we are doing better relatively. But when we look at the when we look at the composition, what are we exporting, what are we importing, then you see where the problem lies. Let me blow your mind. Out of Nigeria's exports, 78.5% is PMS, is crude oil. Out of total exports, 78.5% is crude oil. 12.7% is natural gas, liquefied natural gas, and 2.2% is urea. So this is export. So when we talk about even Nigeria is a large cocoa exporter, cocoa exports as a share of the total exports is pretty much nothing. Is close to 0%. But if you look at the imports, we import significantly PMS, 21% of total imports. PMS, gas oil 5%, and wheat is 4%. So Nigeria is really what's the word? Really the price of wheat products in Nigeria is really elastic to the price in the global market. So when the prices of wheat in the global markets rises upwards, you can expect that wheat, flour, and all other wheat products in Nigeria are also going to trend upwards. So I think that's just what's going on in the trade market.
And obviously, you know, we're trying to, you know, switch from an import-dependent country to an more export-dependent or a balanced economy, as it may seem. But we see the UK economy, we've got some good news. It rebounded more than expected in October. How are you seeing this?
Yeah, we're happy, but again, we are taking
and
that
obviously
with
is where you are.
sort that because while GDP growth came in positive for October, it came in at I think 0.5%. By the time you look at the 3 months to October, it was negative. Like that was what's the word now? September and August, including October, it was negative. So even though it was positive, we are not still. Even though the growth for October was positive, we are not out of the woods yet. And I mean, there are still all these big issues. Inflation is at 11%, which is a fresh 41-year high. We are seeing a cost of living crisis. The price of gas is at record levels, and we're having a cold snap in the UK at the moment. Everything is freezing over large at the moment. As I speak to you, the temperature is -2 degrees, and the warmest it's going to be today is 1 degree Celsius. So we are seeing all of these factors. So I think, and the ONS, the Office of National Statistics, and even the Bank of England forecast that we are not out of the woods yet, that we are still going to experience recession, particularly if the GDP numbers for November and December come in negative, then we'll technically be in recession. In addition to that, Ladi, the cost of borrowing is also significantly high. The Bank of England has significantly increased interest rates, I think by 575 basis points this year, and they're expected also to increase it further when they meet on Thursday. So all of these factors mean that business confidence is down, consumer confidence is down, consumer spending is down, business spending is also down, and this is also going to push down economic growth going forward.
And obviously, all eyes on the US CPI data coming out later today. All right, Dr. Desola Simoni, thank you so much for giving us your perspective on the commodities market today. Thank you.
Thank you, Fab.
All right, we'll take a moment now. All right, now for an opening call to the market, we have Anete Edet now stepping in to give us the details. And Anete, was
good morning, Ladi.
Was a good morning, a bullish opening yesterday, but quite mild.
Yeah, quite mild, but at the same time, you can still call it bullish, especially when you look at the start of the second week of December. And of course, it was much expected, but at the same time, it wasn't a positive market breadth because we had more the sell side than on the gain side. But at the same time, it's a positive market.
I'll take 0.04%.
Just a slight, almost flattish, but in value terms, it's still something that you can take to the bank.
All
yes. Right. Okay, so but before we go to the equities market, I'll take you straight to the fixed income market. The fixed income market, there you see on your board there, the bond market was in a mixed territory at the close of Monday's trading session, the start of the week. There we had the FGM bond auction by traders there. So for the markets at the close of the trading session, we had total number of deals carried out there was just 8. When you take a look at this, the board there, we had the highest concentration is being shared by the 27th of April 2032 paper and the 27th of, of course, it's the same paper. But in terms of the, across the benchmark curve, the average yield there had contracted at the short end. It contracted by 1 basis point, falling interest on the April 2023 paper, which is what you had before. Now, but for the Treasury bills market, it was a bullish sentiment there. Across the curve, the average yield was flat at the short end as well as the mid segment, but it contracted at the long end. It contracted by about 42 basis points, and that's due to participants' demand for the 350 dates to maturity bills, which it retracted by about more than 249 basis points. Let's move over to the open market operation, what you call the OMO. At that market space, average yield there had paired by 1 basis point to about 10.1%. But when you take a look at the board here, the 14th of February 2023 paper had 10 deals, which is accounts for about 47.1 billion naira. But when you take a look at the bigger picture there, the total value there, 121.52 billion naira. Over to the central bank special bills, what you have there is not, kind of an impressive picture, but the attention was focused. If we can have that picture there on the board for us to take a look, we had more of interest on that space. Now let's move over to the equities market, where we saw the start of the week. For the start of the week, it was up by 0.04%, and what we had in terms of value terms, it was up by 9.34 billion naira, and that's thanks to the gains in the share price of Lafarge WAPCO as well as Zenith Bank and FBN Holdings. They were up by Lafarge was up by 0.69% in terms of price increase. Zenith Bank was up by 1.6%, while FBNH was up by about 1.9%, and that offset the losses from the likes of Stanbic, IBTC, and 9 other losers. Take a look at the board there. It's kind of a mixed picture there. You had an unchanged sentiment for the oil and gas as well as the consumer goods sector, but that gain from those two tier 1 lenders, Zenith Bank and FBNH, was what drove the 0.13% gain, which you see here. And then, of course, Lafarge WAPCO was what was responsible for this number on the industrial goods counter. Now, before we go to our guest, let me take a look at the activity chart. For the activity chart, in terms of activity, we had an increase, a 134.66% increase in terms of volume of shares carried out there. And the value was also up, in contrast to what you had on Friday, 120.36%, which is at 2.52 billion naira, in contrast to what you had on Friday. Then in terms of the deals, 36.76% increase, in contrast to what you had still on Friday. It's the start of a new week, 3,337 deals carried out at the close of Monday's trading session. So now let's talk to our guest, Odinaka Linus Nwokonkwo, who's a fixed income dealer at Access Bank, to give us more details about Monday's trading session, particularly when you take a look at the FGM bond auction and its impact on that market. Thank you for joining us, Odinaka Linus.
Hi, thank you for having me.
Okay, yeah, I know trading is getting underway at the fixed income market now, but can you take us through Monday's trading, the sentiment, investor sentiment for the FGM bond auction, which was carried out yesterday, and how the market is turning out at the moment?
Okay, yesterday, the DMO conducted its auction, the bond auction. Prior to yesterday, we've been seeing a bullish sentiment market, and this also played out yesterday, where we saw the subscription on the bond was over 532 billion. Remember that DMO was just offering about 225. So they were able to sell about 264 billion, which most of those sales, about 8%, was from the 2037 bond, and the stop rate decreased by 15 basis points, 45 basis points, and 40 basis points across the three tenors they issued, which is closing at 14.6 for the 2029, 14.75 for the 2032, and 15.8 for the 2037. So this morning, we've seen a bullish run, especially on the 37. We are seeing bids around 15.50. Offers are slightly lower, around 15.4540 in the market point.
Okay, so Odinaka, in just 20 seconds, what are your expectations for tomorrow's auction, OMO auction at the fixed income market? Just 20 seconds.
Oh, okay. The next OMO maturity is actually on the 20th, not tomorrow. It's about 5 billion that will mature. But we have NTB tomorrow, so it's about 13.5 billion on offer, which is what will mature on Thursday. So what you expect is just oversubscription like we've seen in the last two auctions. So maybe slight rate decline, not as serious, significant as what we've seen before. You know, last time it came down from 14.84 to 13.05. So currently we expect it to still come down, considering that the secondary market is around 10.5%. So the last auction closed around 13.05. So we expect it to decline tomorrow and oversubscribe. Yes.
Okay. Thank you for that, for bringing us up to speed with sentiments at the fixed income market. So, Ladi, there you have it for the market.
Yeah.
Mostly bullish, but for the unlisted securities market, it was another round of profit taking.
Another round.
Not good news there.
Not good news. All right. Thank you so much, Anita.
Gotcha.
That was Anita there giving us the details from the equities market and the fixed income market. Now, heading on to the UK, we have Juliana standing by. Got some data this morning. Good morning, Juliana, so the UK has recorded its second largest fall in real wage growth this year, in October, while the unemployment rate also rose. Now, I'm sure workers don't want to hear that.
That's absolutely right. Good morning, Laddie. We have had some fresh data from the Office for National Statistics this morning looking at the labour market. And as you said, unemployment has edged up in the 3 months to October to 3.7%. It was 3.6% in the previous quarter. It just kind of shows that the labour market is cooling. Within that period, 65,000 vacancies fell. However, historically, we still have a pretty robust labour market. There are currently 1.8 million vacancies on record. So if you are watching from the UK, this is a good opportunity to get a job. However, I think economists are really looking at wage growth. We know that wages and high inflation, which is currently at 11.1%, a 41-year high, is a topic of major discussion in the UK at the moment. And in the private sector, it has edged up slightly. We are seeing that wages within that 3 months grew by about 6.1% compared to the public sector, which is at 4.1%. So it sounds good, but unfortunately it's not great, because if you look at 11.1% and your wages are rising 6.1%, then clearly at the end of the month you're still not seeing your wages go as far as you expected. We have had a response from the Chancellor, Jeremy Hunt, basically I would say doubling down on what he said yesterday, that he remains cautiously optimistic about the economic outlook in this country, but warning consumers and households that things are going to get worse in the in the near future. Of course, anytime we are looking at data from the ONS, Laddie, we're looking in the rear view mirror. We're not looking at what's happening now on the 12th of December. We're looking at data from October, and it does seem as if things have got quite tighter in recent weeks.
And obviously, we're going to see how, workers actually spend, this Christmas, knowing that, incomes have been squeezed and it's not even growing as it should. But it's also about the strikes today. We see commuters have been warned they face significant disruption today.
You're absolutely right. The labour market figures have been released on the day where, the month of misery for commuters begins. This week and today kicks off a fresh round of strikes from Network Rail and members of the RMT union. They will be doing a fresh round of 48-hour walkouts starting today. So if you live outside of the city and you use the overground, it was probably very, very difficult for you to get to work this morning. And this is going to continue in the run-up to Christmas. Again, to reiterate what I've been saying over the past couple of months, this is about a long-running dispute over pay, jobs and conditions. The RMT are proposing that they get a 7% pay rise, which again is less than inflation. So even if you do get that pay rise, your money isn't worth what it was worth this time last year. Now, the Network Rail bosses have said that they would offer a 4% backdated pay rise this year and 5% next year. And there have been ongoing pretty tense negotiations. They have proven to be unfruitful. At the moment, in the media in the UK, it does appear as if it's union bosses versus the government and the employers. It appears as if Rishi Sunak is really trying to pit the public against the union bosses, because, of course, it's the public that are going to be paying for this, particularly at a time when people do want to spend time with their loved ones. They do want to travel home for Christmas. They do want to come into London to do their shopping. They're just not going to be able to, which is going to have a knock-on effect on the hospitality sector and retail. So not great. These strikes today will be lasting 48 hours. And again, it does have a knock-on effect on tube commuters, because, of course, if, millions of more people are getting on the tube because they can't get on the train, you are also going to be delayed soon.
Quite a tough year, 2022. Rising prices, inflation, tightening, now strikes, Christmas. All right, Juliana, thank you so much.
Thanks, Laddie.
That was Juliana there giving us the details from the UK. Let's head on to other markets. That's crypto market, not looking so bad this morning. See, price of Bitcoin corrected higher there at $17,292. And we see the market sentiment this morning is fear, 27 points of 100. Might be edging towards 30 going forward at this time. Let's look at the market cap this morning. sits $848.24 billion. That's up 0.30%. And we see volume traded higher this morning, 12.53%. And Bitcoin dominance inching back to that 40% level. Let's look at the price of Bitcoin this morning, $17,168, up 1.34%. Didn't see this coming, but we have that CPI data coming out for the US later today, so we'll see how that impacts the market. But we're seeing quite a move up there for Bitcoin. Volume traded $17.81 billion. Let's look at the price of Ethereum, holding on to that $1,200 level, up 1.79%. Volume traded $4.74 billion. Lower volume was seen in Ethereum this morning. Let's bring in Gilbert Jopata now, financial market analyst, to bring us up to speed. Hello, Gilbert.
Yeah, good morning.
Good morning, Gilbert. And obviously, still about FTX. We saw that Sam Bankman-Fried, the former CEO, has been arrested in the Bahamas. What do you think happens next?
Well, there have been people in the industry doing the right things long before even Sam Bankman-Fried got into the crypto industry. Unfortunately, once in a while, we'll always have bad actors who will come into the space. But the market dynamic has its way of exposing these bad actors. And this is actually a marathon and not a sprint. Trust is something that is built over time. It is those who will still be here in the space in the next 20 to 50 years from now that is going to matter. And the industry actually called for his arrest. So now we have it. So I hope this sends a strong warning to entrepreneurs of centralized exchanges and wallets that the eyes of the law is watching. Meanwhile, I still see a possibility of conflict of interest between the Bahamian government and that of the US, because he has also gone against certain laws of Bahamas. So the understanding I have is, since the Bahamas have a good diplomatic relationship between them and the US, they may still come into an edge that they will decide what is best for him. But right now, there are already charges that have been placed in the US against Sam Bankman-Fried. So it's about time he faced the consequences for his actions.
Yeah, and obviously it still looks like, users with trapped funds on the exchange might not be getting their funds back, even though he's been arrested at this point.
I think there are certain jurisdiction or region that may possibly get theirs. Like there were decisions that in the US was still solvent. So I think even Japan was solvent. It was based on certain advice he had that he should file for bankruptcy. He never knew the implication of filing for that meant that he was going to close withdrawals. So I think certain regions, and when we're talking about region, we are talking about governments of the world that cares about their citizens and what they are doing in certain industries that I think are going to press to make sure they have their fund back, except for regions that don't really care about their citizens or whatsoever is really happening, that may become the sacrificial pig for an outcome like this.
Right. And obviously, we're expecting that CPI data for the US today. What are you seeing happening with the market?
Well, I think this is one of the most important numbers. We have looked at a whole lot of numbers of data recently, but this is the most important because it's going to validate the Fed's next course of action. Why I personally expect inflation to slow, it should slow maybe to a possible 7.3% or less from 7.7 of the previous month. And if this is the case, this is actually more of a catalyst for a more moderate rate increase tomorrow. The Fed chair has suggested that we could have a more moderate rate. And there is a survey that already shows a 78% likelihood of rate increase to 50 basis points, while 22% only still think we will still be at 75 basis points. However, today's number is going to validate the outcome of tomorrow's decision. And if this is the case, I think, it's usual. People see this as good news. We are going to have a short-term rally or euphoria with price, just as a way to celebrate that we are seeing more slow rate hike afterwards.
All right, I guess all eyes on the Fed tomorrow. Is it going to be 50 or 75 basis points? Watch out for that. Thank you so much, Gilbert Reporter, financial market analyst.
Thanks for having me.
All right, let's flip over to the markets now. We see top odds by market cap, though. We see BNB, the biggest downer this morning, $263, losing that $300 mark, down 6.48%. They do have we've got that news about an alleged investigation by the U.S. government there for the Binance exchange. We're watching out for how that works out, but it has impacted the BNB price this morning. We see TON leading the top gainers counter, up 11.68%, the only double-digit gain we have this morning. We see GMX also on that counter. We see PancakeSwap down 5.91%, and TWT there down a big 15.98% this morning. All right, that's how the market's looking for the crypto space this morning, and that's it on the program today. Don't forget to join us by 1:30 on Business Incorporated. John McQuarrie will be here to give us updates and developments in the world of business. And remember, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, and you can watch all our productions. Thank you so much for watching. I'm Ladi Williams. Bye for now.